welcome back. You're watching the 80 Money Show with me, Kavita Thapliyal. Now, following renewed fears of global economic recession, gold rates today climbed to a new lifetime high of 56,746 per 10 gram levels in domestic market, now breaching its previous record high of 56,588 levels. Now, with the shiny yellow metal glittering like never before, is it the time to invest in gold? Let's welcome on board Kunal Shah, Head of Research, Nirmal Commodities, Arnav, Pandya, founder, Moneyeduschool. As we really want to understand the rally in gold and how one can really invest in the shiny metal. Welcome both of you. So Kunal, a new record high, and I think we were having a discussion some time back as well, where we were told about, where you in fact sounded very aggressive on gold. How do you look at the record high levels today? Do you think it's going to sustain?
Well, with a bout of correction and here and there, the bull run in gold is going to stay for a longer time. It's not just a momentary phenomenon right now. The fact remains is that the moment the European Central Bank, the US Central Bank, they both are basically cutting their
We just lost Kunal here. So the same question to you, Arnav. How long do you think this record high levels would sustain, or are we close to seeing a new high in gold?
See, one has to look at the overall trend which is happening with respect to gold, and there are several factors at play here. One is obviously the fact that the US dollar, which had been strengthening for quite some time, has now slowly started slipping. And recently, I mean, it has come back to levels not seen since the last 6-7 months. So that is one thing. The other thing is also that if you look at the World Gold Council data, you will find that central banks across the world are buying gold in larger quantities. So there is also the question of physical demand which is coming up. And if over a period of this year, if one sees that the US Federal Reserve slowly tapers off the rate hikes and then even goes into a slightly positive mode in terms of easing off, then the gold rally can continue. So in that sense, one can find that over a longer period of time, one can expect gold to do well. But obviously, I mean, short-term movements can be very volatile. So those are unpredictable. But from a longer-term perspective, gold looks to be in a good situation at the present moment.
Do I have Kunal back with me? Kunal, you were talking about the levels. Kunal, can you hear me? All right. I think there's some technical issue going on with Kunal. But then, Arnav, now next question to you is, do you think the levels are already high for one to invest in, or one can actually do it in a staggered way?
No, so as with many other ways of investing, one doesn't know when the peaks come, one doesn't know what the bottom is. So the best way to go about this entire process is to invest over a regular period of time. And small investors have the luxury of doing so because they have several options in front of them, whereby over a period of time, they can regularly invest. Because if you are looking at it from the financial planning perspective, if you want a certain exposure of gold in your portfolio, which could be anything between 8 to 10%, then you need to regularly invest too. And that, I think, is the best way to go about it. Do not put everything at one go. Whatever funds you have, spread it out over a period of time.
All right. Kunal, do I have you now?
Yeah, I am extremely sorry. I got disconnected.
That's perfectly fine. So yeah, you can continue talking about the levels and your outlook, please.
Yeah, so we are entering 2023 with heightened amount of uncertainty. Everyone is talking about rate hike, whether they are going to, Western central banks are going to hold increasing rate or what. But the key point here is they are removing liquidity at an alarming pace. Federal Reserve is shrinking its balance sheet by $100 billion per month from last 5 months. And now going forward, throughout the year, they intend to reduce at least $1.2 trillion from the markets. So that is going to lead to surely slowdown in US economy, in European economy, everywhere. So the theme for 2023 is there is a heightened amount of uncertainty, and the biggest friend of the uncertainty is gold. if you consider what has been happening over the last 6 months, central bank themselves have been on a buying spree for gold. So may it be Bank of China, may it be Turkey, may it be India. So central banks are adding gold in their portfolio to diversify their reserves and do the hedging. So at this point, we are at that juncture. Irrespective of the price, you should have your holding in gold. I am expecting gold to test $2,100 on CME this year, and that should translate into in India somewhere around even if our rupee appreciates, it should translate around 61,000 kind of levels going forward. But the point is that, the previous panelist said, that you cannot invest everything at one go. You should keep some room. If it declines, you can add more. So that kind of room you should keep, because already gold prices are up by 50,000 to 57,000 in a matter of 3 months. So I expect this bull run to continue with the small bouts of correction. $40-50 correction can come anytime, but the structural bull run in gold is going to aggravate in the second half of 2023, when Federal Reserve will eventually signal that they are going to cut back this, cut their interest rate or hold increasing rate, or perhaps even stopping their bond purchase program when the economic scenario worsens. So it's very interesting here. Corrections are going to come. Keep holding gold. It will still give you good 10 to 15% return in 2023.
All right, that's interesting. And let's also talk about the kind of ways one can invest in gold through. So, Arnav, sovereign gold bond, gold ETF, gold fund, digital gold. We have a lot of ways to invest in gold, and make it a part of your portfolio. But which is the safest way and a way where you can earn better returns?
So if you look at it just from the point of returns, obviously the sovereign gold bond becomes their primary choice for an investor, because there are two factors at play here. One is you get the benefit of the change in the gold price when you buy the bond. In addition, the government is giving you 2.5% annually. So that 2.5% becomes the additional earning for an investor. So that becomes like an obvious choice when it comes to investing. The good part about the sovereign gold bonds is that if you hold it till maturity, even the gains which you make, capital gains, are tax-free, though the interest part is taxable. So in that sense, this becomes the primary choice for an investor. Those who cannot invest in these kind of bonds, they might want a shorter outlook or a investment horizon which is not very long. For them, the next best choice would become the gold ETF, because that is liquid. You can get out of it anytime. You get a good price in terms of comparison with the actual market price. So that becomes the second choice then.
So Kunal, now is it just gold that we are talking about, or we can also see high record levels in silver?
Yeah, even silver looks pretty attractive, because already we've seen a humongous jump from $18 to almost $25. And going forward, I expect the outperformance of silver to continue in 2023. If you look at the fundamentals, the silver demand is growing at a double-digit growth. And if you look at the supply side, from last 10 years, we've not seen any significant addition in the new silver supply. Demand drivers mainly coming from the clean energy side, that is from the solar side. The solar side is looking very strong from the demand point of view. Even electronics demand is pretty strong. So the new age demand of silver is definitely driving silver prices, and the production of silver haven't been able to catch up amidst whatever has been happening globally. And especially the last 2.5 years was the COVID scenario, where all the South American countries reduced their silver production. So we have a good vacuum created over here. So silver is poised to test $28 on CME, and on India, conservatively, it should test 80 to 85,000 by the end of 2023. And I'm expecting the bull run to continue with the bout of correction. Again and again, I'm mentioning the word bout of correction, because we have seen a significant run up, 30% upside in a matter of 2 months. So it can go down by 5-8%. One should not be surprised. So if you are buying right now, keep room to add more when it goes down. But the view for 2023 for even silver looks quite promising.
Right, so bull run for gold, and if you're invested in silver, there's the high rise story with silver also. Thank you so much, Kunal, for joining in and helping our viewers understand the strategy in gold. We will slip into a short break, but then post that we have Arnav Pandya on board who will be answering viewer queries and help them plan their financial portfolio. All of this after this break.